Yes, hello all, welcome back. We did section A of your pre-March mock for your tax paper in the last lecture, that is yesterday. Today we are doing discussion on section B. Again, doing this debrief only for all of you so that we are absolutely crystal clear with handling of questions, managing of time. So before we proceed, guys, just to remember, please subscribe to the channel, like the video, follow the channel. Don't miss out on this because the next lecture then you may just be missing if not done on time. Okay, so let's start doing this. So we start here with question number 16 and we are progressing ahead with the first case study. How you should be doing a section B question is very important because section B and section C, they really account for more than around 70% of your total marks, correct? So you need this perfection. Never ever read the question first. Read the requirement. First read the introduction paragraph and then read the requirement. Very important. So let's read the scenario first. The following scenario is relevant for questions 16 to 20. Wilde died on 24th September 24. During his lifetime, he made the following transfers. Okay, Wilde owned 80% of the shareholding of Leo Limited and so on. I'm not reading this data further. Let's read the requirement. Accordingly, we'll read that much data only. What is the value of the potentially exempt transfer to REM on 15th May 2018? What is the question wanting to ask? Diminution in the value. So let's do the reading and calculate it accordingly. Will they own 80% of the shareholding of Leo Limited on 15th May 2018? He gifted 20,000 shares to his son. Okay. So then Leo Limited, the remainder of the Leo Limited had a total issued, remaining Leo Limited's, I'm sorry, his son name is Rem. Leo Limited had a total issued share capital of 100,000 shares and the shares were valued as follows on 15th May 18. Percentage of holding 100, 80, 60, 20. Now, what is important to notice? What is diminution in the value? Don't make the mistake of calculating the value which is equivalent to the shares that he has transferred, correct? So, what was the percentage he was holding? 80%. What was the value of that? 80% was valued at 17 per share. So, the total share capital was 100,000. 80% will be 80,000 multiplied by 17. So I get here 1360,000. That is 13,60,000 on 1360,000 was the value of the holding at 80%. What is the diminution? So after gifting 20,000 shares, how much is left with? 60,000 shares, right? So he is at 60% level and that is now valued at 10 per share. 10 multiplied by 60,000 shares will be 6 lakhs, right? 600,000. So we reduce from 1360,000, 600,000 and you will get 760,000, right? So 760,000 is the diminution in the value and the value of PET, correct? Let's go to the next one. How much inheritance tax should Walde have paid on the transfer to the trust on 11th February 22? So do the calculations like we normally do and calculation your IHT. On 11th February 22, he transferred 512,000 to a trust and paid the inheritance tax himself by the donor. It's a lifetime transfer. Before this, there is only one PET transfers and we know PETs are exempt during lifetime. So what you have to do is just do the normal calculations. Okay. So now here I have 512,000. I will reduce the annual exempt amount for the current year as well as the previous year as there was no transfer in the previous year. In total, I will reduce 6,000. Then I will reduce the full NRV because there is no transfers made before it. So there is no GCT. I mean, it will not be reduced only. Complete NRV is available. Because the only transfer before it is the PET and PETs are exempt during lifetime. Reduce it and get your taxable value. So taxable value is 512,000 less 6,000 less 325,000, which is 181,000. Now tax is paid by the donor, so multiply 25% or 20 by 80. I simply do 25% and I get my IHT as 45,250. Done and dusted. So my answer here I will write as 45,250. Done. Let's go to the next one. This is the speed that is needed, my friends. Now next, how much of the transfer to LSA on 18th October 23 will be covered by the marriage exemption? Marriage exemption, it's 100%. So on 18th October 23, Wilde gifted 16,000 to his niece on her marriage. Niece. To his niece, Alicia on a marriage. Okay, it's not the spouse exemption, sorry. It's the marriage exemption. Marriage exemption, and Wilde is not a grandfather, not a parent, not the groom. So is anybody that category. So what is the capping on that category? 1,000. So here we'll have the marriage exemption applicable for him 1,000. Just see how we are reading in phases, we're solving in phases. I have my paper and calculator that I'm using. I'm not writing anything calculations on the screen or doing it for you because we need that speed and accuracy now. I am sure now you all know how to do the calculations, but what is missing is doing it in the correct speed and the correct reading of questions. So my focus here is to make you all completely 100%, be very comfortable with that. Okay, let's go to the next one. Assuming Wilde's NRB nil rate band has been completely used up by the lifetime transfers, what is the total chargeable value of Wilde's death estate? So we just have to get the chargeable value. Now the detail is given to you here. At the time of death, Wilde's estate included the following: house in Brinton and shares portfolio and cash. There was an interest-only mortgage on the house of 214,000, so that we will reduce from the value of the house, and an unpaid credit card bill of 6,000. Again, it's a legal tender that has to be met. So now Wilde had promised to loan Elise's husband 64,000 but had not made the transfer. It's just a promise, not a legal obligation. Hence, it is not going to reduce the estate value. His funeral expenses amounted to 8,400, which reduced your estate value. Wilde died without having made a will and had never married. So nothing will be transferable from the Wilde's, spouse transfer and all. And it's not given that uh, it is transferred to whom. So no RNRB and all there. Okay. So you simply do it on the calculators, guys. You don't need to write it down. And 750,000. Okay, that is the house in Britain. Less 214,000, the interest only mortgage against it. Add 904,000. You get 1,440,000. Okay, that is 1,440,000 that you are getting. Now you will reduce your 6,000 for the unpaid credit card bill. Also, you will reduce the funeral expenses. So when you reduce the funeral expenses, it is 8,400. And I'm sure you know why we are not reducing the promise. So we are getting here 1,425,600, which is your answer. Done. Easy question. All those who tell me, ma'am, IHT haunts us, I'm sure it is not. Okay, which two of the following actions could lead to a reduction in the inheritance tax charge on the lifetime transfers on the death estate? Okay, which two of the following action will lead to a reduction in the IHT on the lifetime transfers or the death estate? So both ways where it could lead to a reduction. Number one is making regular transfers during the lifetime at regular intervals. Definitely it will reduce, because when you make regular transfers during the lifetime, then in that case, if the gap is not 7 years, then your death tax will be reduced. And also, when you make regular transfers during the lifetime, then less assets will be there in the death estate. So less taxability will be there. And during the lifetime, only CLT transfers are to be taxed. So that can be saving. Making more transfers to trust during lifetime, no, absolutely it will increase your lifetime tax. Leaving the main residence from the death estate to a direct descendant, of course, this will give you RNRB. Skipping a generation and leaving assets to grandchildren in will rather than children. Skipping a generation and leaving assets to grandchildren in the will rather than children. Yes, it is benefitable from the death estate point of view. As will it lead to reduction in IHT? No, it will not lead to reduction in IHT for the donor. It is a good tax planning tool. So question is not focusing here on tax planning. Question is focusing on what could lead to a reduction in the tax liability for the donor. So definitely it is not going to make any impact whether you give to children or to your grandchildren. For the donor, the tax liability will remain same. So hence I will not select D from donor point of view. From a planning point of view, yes. From a donor point of view, no. Okay, so good question. Let's go to the next one. Now, guys, just one point in case if you have doubts and queries for, in anything relating to death tax that you're not clear about death tax, I have uploaded a video on my channel in my playlist Tax and ATX. You will find the death tax, the detailed understanding video with question solving over there. So don't forget to watch the video to eliminate any doubts and queries that you have. Okay, let's go to the next one. Now this is a scenario based on input VAT, that is the VAT. Okay, the first question, let's just read the beginning of scenario, then we go to the question. The following scenario is relevant for questions 21 to 25. Rainbow Limited was registered for VAT from 1st June 24. Now let's read the question. How much of the pre-registration input VAT can Rainbow Limited reclaim? We've done a kind of similar question in section A. Let's do in section B as well. Rainbow Limited incurred input VAT on the following costs prior to registration. 1st April 22, plant and machinery for use in trade. VAT paid was 3,700. 1st October 23, legal fees. VAT paid is 420. It's a VAT amount. 1st February 24, advertising expenses and the VAT paid is 680. Okay, so these are the three amounts of VAT paid. What is the pre-registration input VAT can be reclaimed? So what we discussed in section A, 4-year period C for goods that are in inventory and 6 months for services. Let's see. So this is 1st June 24. This is a plant and machinery acquired in April 22. You can reclaim the input VAT on it, right? So we will reclaim the input VAT 3,700. This I will add. Legal fees. Now this is taken in October 23. I just need 6 months period. So that should start from December, right? 6 months. So that is on December, January, February, March, April, May. No. Yeah, January, February, March, April, May, June. So 1st of December the period will start. However, it is October 23. So we will not take it as it is before 6 months. Now, advertising expenses, February 24. It is within the 6 months period, so we can claim it 680. Add 680 here. When you add it, it is 3,700 plus 680. I'll get here 4,380. So that is my answer. Easy? Okay. Next question. What is the tax point for the supply of paint kits by Rainbow Limited? So for this, let's see the tax point. Remember for the tax point, the two important rules. First is your BTP is by default. Any 2 dates that are before BTP, that is going to be your actual tax point that we will consider. Either the invoicing or the payments. Okay. Then after the BTP, if an invoice is issued within 14 days, then again it is your actual tax point that we will consider. Only these important 2 points you have to remember. Now Rainbow Limited incurred input, this we have covered, sorry, paint kits. A customer placed a large order for some paint kits on 16th August, order placed. Rainbow Limited delivered the kits to customer on 31st August. Date of delivery, it's your BTP, 31st August. And sent an invoice on 30th September. Stop. Invoice is not issued within 14 days. So actual tax point cannot be 30th September. The customer paid the invoice on 11th October. Now, October is again after BTP. For me, I will take the payment date only if it is done before BTP. It is not done. So, my actual tax, my relevant tax point will be the BTP only, which is 31st August year. So, my answer is BTP. Let's go to the next one. Quick and easy questions. Okay, the next one. Select whether each of the following statements regarding the flat rate scheme is true or not. Okay, so let's see. It's a general question that looks like, so we don't have to read the data. Let's just look here. Okay, to join the scheme, the expected taxable turnover, of course, flat rate scheme takes excluding VAT for the next 12 months must not exceed 150,000. Yes. When we do the calculations, we take including VAT, but when we see the criteria, we take excluding VAT. Yes, it is true. A business has to leave the scheme if the total turnover excluding VAT exceeds 230,000. Is this the correct answer? Now just think over including and excluding. Okay, yes. So a business has to leave the scheme when the total turnover including VAT is exceeding 230,000. So for flat rate scheme, no, including and excluding is very important to remember. Remember, there's only one place excluding. That is when you join the scheme. When you leave the scheme, when you calculate flat rate, everything is including. The business must have committed no VAT invoice offences in the previous 12 months. Yes, it is a requirement that in the last 12 months, the business has been very clean in the VAT periods, returns and all. VAT return must be submitted once a year. No, it's just a flat rate scheme. It's not an annual scheme. So this is wrong. Clear? Now, the next one. What amount of VAT would be payable to HMRC by Rainbow Limited for the year ended 31st March 26 if it uses the flat rate scheme? This is very easy. Get the amount including VAT, multiply the flat rate percentage, which is 12%. So let's do the calculation here. What is the value including VAT? The company's forecast VAT inclusive turnover is 24,000, zero rated sales, and standard rated sales is 59,000. Okay, the VAT inclusive turnover. And the standard rated expenses for the same period are exclusive of VAT are 19,800. Okay, so let's do the calculation here. What is 12% that we will take here? Just a minute. This is a zero rate. I think it's a zero rated also, but everything is given VAT inclusive. It's a very straightforward question. I had a doubt how it is so straightforward, but it's pretty easy. 24,000 plus 59,000 multiplied by 12%. Yes, so the answer is 9960. Quite easy question. Okay, let's go to the next one. What amount of VAT will be payable by Rainbow Limited if it does not use the flat rate scheme? That is normal calculation you will do here. So this is your VAT inclusive turnover. Calculate the VAT on it and calculate the VAT here. That's all. Since this is VAT inclusive, now guys, I have uploaded one more video on calculating markup and margin, because just like the inclusive exclusive may confuse you, so markup margin concept will make you understand that if we have to calculate the VAT inclusive and exclusive, how to do the calculations. Anyways, I will do it here. Since it is VAT inclusive, this is representing 112%. This is representing 120% because by default we take 20%, right? So 24,000 is zero rated, no VAT on it. On 59,000, calculate the VAT exclusive sale. Okay. So 59,000 multiplied by 100 divided by 120. I get the VAT amount as, in fact, I can do 20 by 120 because I just want VAT amount. Okay, so 59,000 multiplied by 20 by 120. I get here 9833. 20 by 120. I've just taken out the VAT amount. Now, input VAT will be claimed on the entire purchases, even if it towards the zero rated purchases, because on zero rated turnover, You will not have any output VAT to be paid, but input VAT is allowed. So 19,800 is the VAT exclusive amount. Multiply 20% on it, 3960. Reduce it now from 9833. So you will get here the amount as 5873 is the net VAT output payable to HMRC. So that is 5873. Done. Done with all your VAT portions, and I'm sure now VAT looks easier. Let's go to the next scenario. Next scenario is about the chargeable gains. Okay. So next scenario is about chargeable gains. The following scenario is relevant for questions 26 to 30. Heather made the following disposals during the tax year 24-25, and the details are given. Let's take one by doing the one by one question. What is the chargeable gain on the sale of Heather's cottage before any relief? Before any relief, what is the chargeable gain? So before any relief, so let's do the calculation on cottage. Heather sold a cottage that he had purchased on 1st August 2013 for 207,000. So 207,000 is the cost that I will reduce, including a legal fees of 2,300. You know that incidental cost on acquisition will also be reduced, so I will reduce 2,300 also. This is, I'm doing, look at this. This is how I will do in the rough paper in my exam also. I will start doing the calculations parallelly. I will not wait to completely read and then do a rereading. That is going to waste a lot of time. Section C, yes, we always reread when there is a portion, numericals and on involved, just to ensure that the entire question doesn't get wrong. But in section B, you can do parallel solving very comfortably. Okay, now no, this is including legal fees. Wait, 207,000 including legal fees. So I will not reduce 2,300 again because this is already including 2,300. During his ownership, Hadav spent 3,500 on roof repairs following a storm. So following a storm, there is a roof repair done, and 19,200 off on the kitchen extension. Now what we reduce is enhancement expenditure, that is in the nature of a capital. Right? That is not in the nature of revenue, day-to-day expenses. Roof repair is a regular day-to-day revenue expense. So that I will not consider here. I will just consider the capital expenditure, which is extension here, which is 19,200. So that also we will reduce here. The cottage was sold for 271,000. So that I will take as the sale proceeds. 271,000. Heather lived in the cottage until this. So I think this is from PRR point of view, not needed. We just need chargeable gains before relief. So let's reduce this and calculate the gains. 271,000 less 207,000 and less 19,200. So I get here 44,800. Done? Done. Easy now. I'm sure the next question is on PRR. Next. State whether each of the following statements regarding relief available in respect of gain on Heather is true or false. Let's read one by one and then solve it. Okay. Private residence relief will be available for the period from August 15 to August 16 as part of the 3 or any other reason deemed occupation. Let's check here. From August 15 to August 16, Heather lived in the cottage until 1st August 15. Guys, when it is given that he lived in the cottage before it, that means before this period there has been actual occupation. In order to have any other reason relief for 3 years, you need after that particular period also actual occupation. Okay, so let's see if it is there or not. Only then deemed occupation criteria is met here. Now, then when traveling until 1st August 16, now this is the period that is asked in the question. He lived in the cottage again until August 18. So my criteria are met. Hence it is true. We can claim any other deemed absence, any other absence deemed occupation. Good. Next one. PRR will be available for the part of the period from August 18 to August 24 as part of the 3 years any other reason deemed occupation also. So again, there has been actual occupation till August 18. If I want to claim for a period beyond 18, then again I need one more actual occupation. So whatever periods you want to take this deemed occupation for any other reason, whatever is the period, after that also you need the deemed occupation. You need the actual occupation. Okay. So let's read. So he lived in the cottage until 1st August 18, after which he let it out until the sale. So he's never lived in it actually. No actual occupation. So this part period cannot be claimed. PRR will be available for the final 9 months of ownership. Yes, it's a by default deemed occupation. Letting relief will be available from August 18 onwards till the date of disposal. But letting relief will only be available, uh, though it is written that let out, but then it is only available when the owner also lives in the property while he lets out the remaining of the property or some part of the property. The entire property let out will not give us letting relief. So this is false. Got it? Here it doesn't say that he's occupying the property. It is just said that he's let out the property. So we assume it's completely let out. Hence, letting relief will not be available. Next question. What is the sale proceeds figure? What sale proceeds figure should be used to calculate? Why it is like this? Now it's got corrected. Okay, do the next one. So the next one is about what sale proceeds figure should be used to calculate the chargeable gains on the gift of 600 shares in Lakers entity. Okay, so there's a gift of 600 shares. What sale proceeds figure should be used? What sale proceeds? So let's read it here. Shares in Lakers company on 1st December 24, Hadar gave 600 shares in Lakers company to his daughter. On that date, the shares were quoted on the stock exchange at 4.3. The opening rate and the closing rate is 4.8. Stop. What is the way that we use in chargeable gains? Mid price. Calculate the mid price, multiply with 600 and you get your price. Okay. Hadar purchased the shares, so this is all the detail. Hadar is unsure whether the gift of Lakers company shares will qualify for holdover relief or not. I think that's for the subsequent questions. So let's do it here. What is the average price? 4.8. How do you calculate average? A plus B by 2. Normal average method that we use. So 4.8 plus 4.3 divided by 2. You get 4.55. Multiply with 600 shares and you get 62730. 2730. 600 multiplied by average of it. So done? Clear? Okay, let's go to the next one. What is the total allowable cost that would be deducted in calculating the chargeable gain on Hadar's gift of 600 shares in Lakers company? So he has purchased the shares like this. We have to accumulate the cost and take the proportionate. Right? So let's accumulate and take the proportionate. But we have to first see the matching rules, right? First is match the shares sold against the shares disposed of on the same date of sale. Sale date is 1st December 24. We don't have any shares on that. Okay, next is match the shares sold against the shares acquired in the 30 days after the date of disposal. We do have an acquisition here of 200 shares. So these 200 shares will be dealt separately. Okay, and we have to calculate only the cost, not the gains. So don't do the mistake in calculating gains. What is the cost of 200 shares? 600. So this I will add. With this, I will add the shares pool allocated cost. Because then the third step is match the shares sold against the shares pool. So the shares acquired before the date of disposal is these two purchases. 1st May 2020 and 1st June 21. Let's accumulate them and add them here. So here I'll write number and cost. First acquisition is May 20. I will add 500. Cost is 1,000. Next acquisition on June 21. I will add 300 and cost is 800. Get the totals. Total number of shares are 800. Total cost is 1800. Now get the proportionate cost for how many shares? Total disposal is 600 shares, out of which 200 shares cost I've already taken. Remaining 400 are there, so reduce 400 from here and get the proportionate cost for 400. 1800 is the cost for 800 shares. So what is the cost for 400 shares? 900. So the total cost will be 9 plus 6, 1500. Done? Clear? Great. Next one, select whether each of the following statements regarding gift holdover relief on the gift of shares in Lakers company is true or false. Okay, just simple true or false. So we, because he's unsure about gift holdover relief, right? So it's the last question for section B and this case study as well. Okay, let's discuss this. We will see with respect to the scenario. Heather needs to be an employee of Lakers company for the relief to apply. No, for gift holdover, no. We just need for BADR. It's a false one. Okay, now next. Heather needs to hold at least 10% of shares. No. We don't have any such criteria for gift holdover relief. We have the same criteria for BADR. And that is also not 10%, that's 5%. Heather needs to have owned the shares for 2 years again. No. It's all about BADR typically that they're writing. Heather gifts need to be made to a connected person. Is this a criteria that it needs to be made to a connected person? No, we have not read any such criteria. So this is also false because there is no requirement that it must be made to a connected person. In fact, when I come to the B point, the criteria is on the quoted shares, that under the gift holdover relief criteria, it needs to be made to a quote. It needs to be, in case of quoted shares, we need minimum 5% holding. Remember the personal trading company clause. Okay, so all of these are false in fact. For the gift holdover relief. So I'm sure now with the different questions that we have done, now you are absolutely clear how to handle section B questions. Guys, if you see the time, we have taken around 31 minutes, 32 minutes to solve it. Your ideal time in your exam scenario is to do these scenarios in 45 minutes. Now, do you think it is challengeable to do it? I don't see it. It is just that you need to be conceptually clear, you need to be revising well, and then it is just an icing on the cake. Okay, be focused, be concentrated. In case if you're not till now also subscribe to my channel, please do that quickly, because we have a next session coming up for the third part of this debrief session, which is doing your section C questions on the CV platform and understanding the different tips to handle these questions. Okay, so now see you for this next session of doing section C discussion.